All right, guys, what's going on? I hope you had a wonderful weekend. I hope you guys are ready to trade on Monday. I want to talk about something very, very important, and that's going to be how much money should you put into each trade, and really, how much should you expose of your account? And now, what made me want to do this? He's probably going to get so he's probably going to roll his eyes when he hears this. But my boy Alex, man, he came to me the other day and he told me on Friday, he was like, Josh, you're not going to believe this, man. I had these VIX calls and I sold them the day before. If I held them, I would have made like $3,000. And, he's bummed out. He didn't lose his money. He got his account back. It was an interesting story. Maybe I should actually go into depth. Pretty much, he bought them the week before, was down on them, and he was pretty much about to be out. And now, what the big part about this was, he said he put his whole account into it. And now he was trading with the small account, and I saw him build this account over the last couple of weeks. He put in like $100, built it to like $600-700, and he was really, really convicted on this trade and put all of his money into this one trade on the VIX calls. And now I was giving him a bunch of shit. That's why I'm saying this now. I love you, Alex. If I didn't love you, I wouldn't be giving you shit, even on the YouTube videos. But no, this is a big question that a lot of people have. And I think it brings up a point of a big problem you guys can avoid, especially trading. I think at any level, it brings up two parts. It's one at a beginner level, and even when you're not a beginner, it's how do you handle your trading convictions. The stock market does not care what you think. It does not care what I think. There's no way of knowing what's going to happen. Anybody who says they could predict it, this and that, take that with a grain of salt, or even then they're falling victim to this same mistake. And that's what the market, it rips people apart who get convicted, in the sense that you go in on something, you really believe it. You can be right sometimes, but a lot of times this is what leads to emotion. So this is an emotional thing as well as kind of a technical thing of how much you should allocate. So I wanted to highlight here, this was this week. I'm not really actually going to highlight these trades. What I want to talk about is, oh, what the heck happened? My portfolio here, and going over it, and it's different. You guys are going to see, I wired in that 100K. I actually just, I think you guys saw I was like 91. It's been like 2 weeks. I think I made like 10 grand on it, got up to like 99. I wired 30 or so thousand dollars out on Friday. I'm putting it into another brokerage, so I'm going to give you guys some updates on that. I'm actually really excited to use them. But what I wanted to show with this was that even in this portfolio that I show for you guys on YouTube, $100,000 at the end of the day, even if it's down at 67, you could see the distribution. It is $67,000 net value, $52,600 in cash. So pretty much there's like what, $15,000 invested, about so, give or take. But now what I'm saying is, you do the math, not all of these are options. So right here, 200 shares, 200 shares, 50, 100, you do the math, that's like what, 1,700 plus another 12, that's like 3,000. And then add, that's like what, $6,700 right there. So it's about like $10,000 in I would say vested in options, and I don't even think that justifies the math properly, because not all of these. I've had some small share counts. I have random weed penny stocks and shit like that. But again, you see, I'm sitting on a lot of cash. It's not going towards options. And now this was the point, because he put his whole entire account into it. And that was one of the biggest things. I get it, even trading on a small account, you shouldn't do that. And really, the main rule, pretty much at this point, when I did have, I wired the other 30,000 cash out, so that, I think I'm at like what, 10,000 invested in options on a $50,000 account. That's like 20%, but it was at 100,000. So, you bring that math down, it was like $10,000 invested in cash. I think it was slightly less. It was about 10%, maybe less. Really, general rule of thumb: 5% if you want to be conservative of your account, put it into options, 10% if you want to be risky. And that's something you have to keep in context with. If you want to play that way, do you have to all the time? Not necessarily. I get it with small accounts, $1,000, if you're going 20%, 200 bucks on every trade, you're going to get 5 plays. I would probably recommend 10% on that, but you got to be careful. But the thing I was telling my boy about with all this and his situation, he was explaining, he was like, oh, I could have made this much money if I held. I told him, don't look at that. You should be focusing on the fact you got your money back. That's a get out of jail free card. You should be ecstatic. And he's like, oh, well, I said study that play, but initially right where he went wrong was over leveraging himself. So I've talked about it in the free stock trading course. That's in the link in the bio. Go check that out. But the big part is exposure. He exposed all of himself. So right off the bat, it didn't matter if that was a good play or a bad play. He is just unnecessarily, it's a big risk he's taking, putting everything in there. He's going to be now, subject to a lot more emotional error that's going to happen. Greed is going to act as that flashbang I discussed. So he has to be careful with that. That right off the bat is the first error. And that's what I'm saying for you guys. Not overexposing yourself is the biggest thing you could do to not mess up a trade right off the bat, and to not be put in these situations where, oh, I could have made this much money, and getting that emotional roller coaster leading you to chase. That's the one thing. The second was what he played, and this is, so one is the emotions, and isn't it funny that comes first, but the next thing is what he played in, well, I would say the conviction of it, but that goes hand in hand in emotions. But the fact he played VIX calls, playing options on a levered ETF, or on just any ETF that's weighted to the downside, that's designed to go to zero. I've made a video on this. It's risky. You have to really be right. There's nothing, one, you're playing on a conviction, but then two, you understand what you're playing, because if you play it through an asset like the VIX, you're pretty much saying, I have a conviction, and I think it's going to happen in this time frame. So you have to really be spot on with your timing, or know, the broader lesson. Not all of you are going to do that same scenario, but understand the vehicle that you're playing to get what you want. If you think something's going to happen, find the best and suitable way to maximize your dollar, to get the most delta, to get the most gain out of your options, your risk reward, so that you're not playing it through a vessel where it's not going to reflect that. Because he could have been right in this case, and playing something as difficult as the UVXY or the VIX and getting calls on that, the time premium and how it's weighted and how everything's going to work, it's not really going to work in his favor a lot of the time. So that's something you got to be careful about. So there's that. And, really what this comes into, how much should you put into a trade? Like I said, 5-10%, keep it small. And, that's per trade. And, think about your account. Don't try to put a lot at once. I was going to make a video on this. I want to show a live example where I'm up, because this happens in a day. You could even see it on my portfolio. Friday saying I closed down $800. That's because I sold and took a lot of profits. And, I was up on stuff. I realized it. I get it in cash, but then everything else I'm holding, now the remaining stuff is down. You have to be careful of the swings that could happen with options. And really, you could go from up to down, even something going from up to break even, and then one thing going against you that could really change it. So the point with that is, don't hold too many options contracts, or be aware how, exposing yourself too much at one time. Don't underestimate the event for catastrophic failure. If you guys even go look at that video where I talk, with Amazon and Walmart we just posted, that play we were discussing, that was on like a Tuesday or Wednesday. The market didn't make these moves it made over the weekend, or Thursday and Friday. And it was crazy to think we were looking at a call spread or a put spread where that was like a low odds of hitting, and you see what happens. So don't underestimate how fast these options can move, especially when you got a high theta on something with a short expiration. So be careful with that. And that's, it all comes down to now managing your risk and how much you should put in. So I would say, don't, 5-10% per trade, and try not to put more than 40% of your account all out on one at once, or within like a same expiration date. And that's very, very risky. Again, I don't even, maybe I would say, that's 40% if you want to be a degenerate, 30% of your account if you really want to be safe. And, you give yourself time. Hey, I lost. Let me go back to paper trading. Let me analyze what I did wrong, or at least have an opportunity, and don't get, flooded with emotions and all that. So be smart, you guys. I love you all. Hopefully this helps. Love you too, Alex. Thank you for the example. And yeah, make sure you guys subscribe, drop a like. Peace. Good luck Monday.